Hi, well, welcome back. Those of you who have subscribed to my channel, I think we're up to like 500 people now. I haven't done one of these for a long time, but this week I've got to do a presentation, so I figured I would get some practice in. I'm not sure this is the best way to do this. I'm looking a bit red this morning for no reason, and I'm sat in our kitchen, which is about to be renovated. So those are kitchen tiles behind us, which makes it look a little bit like a psychiatric hospital. Right, the topic is key principles, I have to read this, key principles of financial management in a project environment, which sounds a pretty big topic. But before that, I do need to introduce myself. So for those of you who are new, my name's Mark Fielding Pritchard. I'm doing this, as I said, because I have a presentation this week. The topic of the presentation is key principles of financial management in a project environment. And my background is I've worked projects for 25 years. I trained as an accountant with PricewaterhouseCoopers in Edinburgh. 1992, I was asked to go to Russia for 2 weeks while I was working for the Institute of Chartered Accountants. I went, that went pretty well. I started going regularly to do individual projects, you know, and those projects at the time were implementation of accountancy, implementation of finance. 1995, I moved out permanently, set up my own training company, and we were doing ACCA teaching mainly, and also these projects, because these development projects, which were running all over the place in Russia at the time, were based on improving the situation with accounting, finance, auditing. And then as Russia became more developed, I kind of drifted east, so we went to Kazakhstan, Kyrgyzstan, Afghanistan. So the topic, to repeat, is key principles of financial management in a project environment. My name is Mark Fielding Pritchard, and I have been doing development projects for a long time now. Thank you. We'll move on to the next slide, which, from one of the slides I've got down here, which is why I keep looking down, is the title slide. Right, so anyway, as promised, the next slide is the title slide. So key principles of financial, key principles, yes, that's right, it's so easy to do this. Key principles of financial management in a project environment. So we're going to be running through the main financial things, stop me if I get too technical, the main financial items which affect a project. Just to say that my background is obviously development projects, working in countries which are, as the name suggests, developing. So therefore, we're going to be my stance on this, or my glance, or my point of view, will be based from a development background. Right, moving swiftly along, and that wall just looks so horrible looking at it from this computer. Right, excuse me, well, back again, here I am, red-faced in the psychiatric clinic. It's been a short time for you, but it's been a long time for me, because I've been desperately struggling with PowerPoint, trying to get it to record the times. You have to set the timings for the slides now. No one tells you this stuff. Right, slide number 3. As you can see, when you look at slide number 3, it's nice and simple. Our topic is key principles of financial management in a project environment. So before we begin, let's start with what is a project. So it tells you there on the slide, and this is straight from Wikipedia or Investopedia, a project is a series of tasks that need to be completed in order to reach a specific outcome. And that's pretty much as good of a definition as I could find anywhere, to be honest. The only thing I would say is normally it's time bound. So therefore, what you will find is that your project will have a start date and it'll have a finish date. Needless to say, you'll have a budget and so on. And even if your budget is just people time, not money, there's still going to be a budget there. Right, I hope that everyone has pretty clear in their mind what a project is. A couple of other little things on the slide that I've put there. It says current trends. Current trends is just kind of fashion and stuff like that. We're getting to the point when people are a little bit wary of using the word project, because the word project implies that there is an end to it as well. Now, 10 years ago in development projects, everyone had this idea of sustainability. And sustainability meant that, okay, well, the foreigners went home, the project never really ended. It had a legacy. And so you educated people in that legacy state. And it was perfectly reasonable. And that's why we did things like making sure the IFRS was put into university syllabi and things like that. So that after we'd gone, that process of education continued. So project, having said that, looking through the internet at jobs and stuff, project manager is still a job out there, and we still talk about projects. So current trends, just that word projects really. Secondly, what types of project? With what types of project, let's assume that Trump decides he wants to spend $250 million on assisting economic development in Central Asia, and there are a whole load of tenders go up for projects. Those projects will be different types of projects. There's development projects, there'll be education projects, there's grants, which are simply to help local people, and there will also be projects which to a large degree are very short projects, but will be gifts. Gifts of fixed assets, computers to schools and stuff like that. That's vitally important if you are someone writing a bid to go into a tender, because when the bid assessor looks at it, he will map to make sure that what you are offering matches the type of project that is actually required. Okay? Right. At the end of that slide, all I really want you to know is what is a project. Let's move on then. Slide number 4. Right, slide number 4 just follows on from this idea of projects, and I got to be honest, I'm getting a little bit behind time now. I have 15 minutes to do this. So I've given you some examples of projects here. Right, number 1 is designing a BMW engine. I have to tell the truth, I have never been on a project where we've whipped up a quick BMW engine. I put this one in because I googled examples of projects, and it was the first thing that came up was how to design a BMW engine. So, and there's no reason why not. You have a number of people, you have a number of materials, you start and you end up with an engine. Right, the examples that I've given underneath, which are called examples, I've left this as examples from the slide because this is examples from my life, so project I've worked on. So, working for Big Four, that noise in the background is my dog complaining I'm keeping her awake. Examples of this would be a phone call with the government, so a Big Four accountancy firm, and we were speaking to an African government, and we were pitching the idea that we would help them write international accounting standards. No, we weren't. We were pitching the idea that we would help them write their accounting standards, which would be compliant with international accounting standards. So that was a project. There was 6 of us. I was there as a technical expert, and then there was representatives of the Big Four firm. And we won it as well. Writing training manuals, so I sat home for 6 months, wrote some training manuals for chartered accountants in Britain. I can't remember how I wrote them, 12 or something. Got paid a couple of grand per book. Took a couple of weeks each. So that was an example of a project as well, and that was a really good project because it's just me on it, other than the people who reviewed my books. And finally, the third one was computer implementation, so Oracle implementation in Kazakhstan. We had $84 million. That was for 13 pillars, and I was in charge of 2, being accounting and auditing, and the head office team. Now, that was a team that worked for me, not just for me, there was 2 of us, me and a local lady called Galina, and our team who worked for us was 40 people. Right, all I really want you to understand is get clear in your head, what is a project? Right, the name of our topic is, let me read it again, just make sure I get it right. Key principles of financial management in a project environment. Right, your key management tool for your finances is your budget. As with any budget, you will have to prepare your budget. Your budget will be part of your tender process. It will be approved by the donor, assuming you're doing development. It will be approved by the budget committee or whatever if you're working for BMW. And then in your budget you will have some form of income. You will then have your expenses, being in principle your cost of sales. You will then have, and your cost of sales will then be broken down into materials, labor, and overhead. Right, I hope everybody's quite clear on that. So we have a budget. Let's assume that you're launching a brand of cigarettes. What will happen in your budget, therefore, is that your key item, so if you look on your slide, it says your key item will be the revenue that you get from your cigarettes. So how many units of packets of cigarettes are usually measured in what we call 100 sticks, so 5 packs. So how many 100 sticks will you sell, and how much cash will you get for that? Once you've got those 2 things together, now they will be intertwined. The higher the cost of the cigarettes, the lower will be the volume of sales. Yeah, and you're trying to find that ideal point when you maximize your revenue. So if you look on your slide, therefore, you have key item. If it's a commercial organization, that's going to be revenue income based. So what the number of units you're going to sell, the number of BMW cars, the number of packs of cigarettes, and how much revenue will that generate. That will be your key item. Once you come below that, then you will have your cost of sales, so your materials, how much tobacco, how much paper, how many filters, how many chemicals do you need. You'll have your labor, which in cigarettes is going to be fairly limited, but in things like fancy cars, it really might be quite a lot. And then you'll have your overhead. So your overhead is these additional expenses, so rent of the factory, auditors, training, whatever else you're applying to the product itself. Right, what do you need to understand from that slide? A budget. What is a budget? A budget is this plan of what you're going to do. Do remember, and accountants forget this, that your budget will be in financial terms and it will be in non-financial terms as well. How many packs of cigarettes are we going to sell? So how much paper in square meters do we actually need? And so on and so forth. Right, key item, sales, cost of sales, materials, labor, overheads, your fixed overheads, things that don't change, rent of your factory, sell 1 packet of cigarettes or 20 million packets of cigarettes, your rent in principle during a short period should stay the same. Your variable overhead, so overheads that change, so things such as electricity, the more that you sell will be electricity, and in fact electricity will be semi-variable. A semi-variable overhead is where you have a fixed element and a variable overhead. So variable overhead might be water for tobacco, where you clean and dry the tobacco. Right, semi-variable would be electricity. You pay a fixed sum of money, sell 1 packet of cigarettes, 1 million packets of cigarettes, you pay a fixed sum of money, which is for the line that brings electricity to your factory. Then there will be a variable element as well. Right, fixed is fixed, variable changes with production, and semi-variable has a fixed element and it has a variable element. Right, what we've done there is we've talked about budgeting in a standard commercial organization. Okay? Right, so in the last slide we talked about budgeting in a standard commercial organization. We said that the key items will almost always, not always, but almost always be related to revenue. So then how many packets of cigarettes are we going to sell? How many BMWs are we going to sell? Then you'll have your material costs, your labor costs, and your overheads. Your overheads being these additional costs. You'll have fixed overheads, overheads which don't change with the number of units you produce. Then you will have your variable overheads, which in principle change directly in proportion, and then you'll have these mixed overheads or semi-fixed, semi-variable overheads, which have a fixed element and a variable element. Examples are electricity, mobile phones. It's all you have a mobile phone, but you still have to pay a landline, yeah, and then you pay for each call on top. Okay, right, the difference now, if you look at this slide, is that we're starting to talk about these development projects, and you'll see that these key items, so you remember the thing that drives the whole budget, it's much, much less likely to be based around sales. So I just gave you some examples here. One would be an education program where the object of the exercise is to train people, something simple, teach people to read, yeah, how many people can you get through? Now, you have to be a bit careful with education. Education providers will want to have one guy, one big room, and 1,000 people, because if they get paid by the person, that minimizes their costs. So with education, you'll find in the project documents as well, there'll be limits on the number of people per course, and you may even find that for each certain number of people, you have to have additional tutors. So when I worked in Myanmar, I think we had 35 in a class for the training the audit department, but we had to have 2 tutors, because once you went over 20 people, they wanted 2 tutors. So for education, you might find therefore that your key item is the number of people trained, and so therefore you'll get a certain sum of money for each person. For mine clearance, you may find that it's equipment. Training people to clear mines, I don't actually know, I've never done it, but it may not be so difficult, but you have to have real special equipment that's going to make sure they don't get hurt and so on. So therefore you may find that the structure of the budget is based around how many of these things can we purchase, and then everything else will be driven as a function of number of units. And number 3 is vaccines administered. So, you know, if you're going, my example there, vaccines administered. So if we're inoculating people against diseases. Right, so those are kind of examples of where it won't really be sales income. It's still going to be driven by income, though. You're still going to be some kind of factor of income. Areas where you're going to get things which are slightly different as well are variances. Right, what happens with your budget then is you have your budget. Your budget is your planned expenditure, your planned time, your planned number of people. And then as you go through, you compare actual to budget. The differences between actual and budget are called variances. Now, where you'll get differences here, I've marked some of these things down. So if it says controllable and uncontrollable, because of the environments that you're operating in, the number of things which are not under your control will change significantly. Particularly where you'll get a lot of this stuff is where you've prepared the budget sitting in an office in London, and then when you get to Bishkek or somewhere, you find the world is a really, really different place. So what's controllable and what's uncontrollable? The other thing is adverse and favorable. With your variances, let's assume you're manufacturing an engine and you spend less money than you thought. That's good, right? It's favorable. Right, that may not be such a good thing if you're on a development project, because from your point of view, the donor may ask for their money back, or then there may be questions about, well, have you really done enough? So with adverse variances, sometimes, as long as they're not too serious, it's actually easier. So you will still calculate. Remember, our topic is principles of financial management. You'll still calculate your variances, but the way that you interpret them may be different. Good. Move on to the next slide. Okay, so my 7th slide. Little recap, therefore. Key principles of financial management in a project environment. We've talked about what is a project. And then we've talked about I'll try not to shout actually, and then we've talked about this key driver, this key control tool, fantastic words they are, aren't they? Use those in an interview, which is your budget. So you prepare your budget. We talked a little bit about what the differences in the budget will be. This idea of the key item that drives the whole budget is likely to be slightly different in a development project from a commercial organization. You already know you're going to have your key item. If it's commercial, you'll have cost of sales, which is made up of materials, labor, and overhead. And your development project is going to be exactly the same. I mean, most likely your labor will be very high in the projects I worked on, so if I was involved. And your labor cost, your material, if you're doing accountancy, may be fairly low, though not necessarily. Doing ERP implementation, your hardware and your software will be a massive cost. Right, just a couple of things here, which are other items to tidy up. I think I'm way over my 15 minutes now, aren't I? Right, under budget. What happens if you're under budget? That will depend on who you're working for. If you are doing vaccinations, some countries, some donors may say, just go vaccinate more people. Other countries will ask for the money back. The Netherlands was a country that we had this stuff with. So this is where we talked about this idea where adverse and favorable may not have the same quite outcomes that they have in commercial projects as well. Right, interest earned. What happens is you start your project, you are told your project is $1 million to teach IFRS to how many people in Turkmenistan, and you get $500,000 as your first tranche of funds up front. What happens is you won't spend all of that money immediately, or it would be very strange if you did, so it earns interest. So what happens to the interest? Some countries, Great Britain, allow you to keep it and add it to the project funds to do more. Other countries, the Netherlands, will ask for it back. So it depends from project to project. Time overruns. Every single project overruns in time. What you have to do if it overruns in time is you have to go to the donors and ask them to give you more time, so you have a piece of paper they sign off. Usually, as long as they can see that there's going to be an end to this thing, or there's a reasonable reason why it hasn't happened, then you're absolutely fine. If the damn thing's been dragging on for years and stuff like that, then it can be a bit more difficult. Finally, legal issues. You have to make sure that your project is within the realms of the law. If you're doing education for girls in Afghanistan or something, you may find that is not as easy as you thought. Other things as well, issues that we've had in the past, project managers really keen to get going, and it's like, oh, I'll just come now and then we'll fudge your timesheet later. You have to kill off those kind of things. You don't start till the money's arrived, and you're not covered by things like insurance until the project officially starts. So, get in your canoe and paddle out into the Pacific Ocean 2 weeks before the project starts. If you go overboard, you've no comeback. Yeah. Right, so just be aware of the legal issues and what you're doing. Copyright is another big one. It's a number of people on projects with fake versions of things. Okay, right, we did the principles of financial management in a project environment. We looked at what's a project. We looked at the budget, which is the key management tool from really overall, but the financial perspective as well. And then we just had a little look at why budgets will be different from commercial organizations and projects. And then at the end, we did a little tidy up with issues that they come up all the time. And you'll find someone like the UN that does this all day, every day. Their legal agreements will include all of these things. Okay, thank you for listening, and I hope my presentation goes well. Goodbye. If you have any questions, then stick them down below when I put this on YouTube.